particularly because we're seeing such a precipitous fall for a lot of these companies that just yesterday we were saying would be relatively insulated. How do you approach this?
Yeah, so good morning, Alex, but not such a good morning at the end of the day. You're right, Pharma's taken it on the chin today because of the statement that they would be putting some sort of tariffs on the pharma sector as well, and that will come soon. But you got to remember that tariffs yes, it does hurt some amount of consumption there, but pharma is a segment where you cannot affect consumption to a large extent unless it's discretionary pharma purchases, maybe, some creams for beautification and things like that. If it's medicine for health reasons, they're still going to have to continue to consume them. And any of these companies that are selling that drug in the US is probably not going to bear the brunt of the cost increase, but the end customer is. And in general, the end customer out there has the insurance in place, so the insurance is going to bear the brunt of it. So I wouldn't look at it as negatively for pharma. Some companies like Sun Pharma, who are specializing in certain, products which are not necessarily essential, but more, I would rather do it for my personal health reasons. Those kind of products may get affected. So I wouldn't look at it too negatively. Markets probably overreacting also in the near term. But then because of the noise and because of what is happening globally, I think people are trying to prejudge or take a call way earlier than actually impacts are going to happen. I would not be jumping around as much to make calls right away, because at the end of the day, there's going to be a lot of negotiation. Rates are going to change over a period of time. There is something, if he puts pharma tariffs on everyone, how much he puts on Indian pharma versus he puts on maybe Chinese pharma or Israeli pharma, all needs to be seen as a complete total. But yes, markets are probably reacting ahead because of panic.
Okay, so markets are reacting ahead of panic is the view coming in from Samir. Jatin, Dheeraj, we know that you're waiting on the line. We just a quick check on the markets before we come to you. Jatin, how do you take a trade in these kind of volatile markets right now is one part of my question. And secondly, what are your views with respect to the Nifty Pharma right now?
Yeah, see, in terms of trade, what you take, definitely the trend is negative. So we'll go look at going short. But considering that we are already around 300 points down from the opening, it makes shorting at current levels little difficult. We need a pullback, intraday pullback towards 23,000, 23,025, and then go short on the Nifty. So we'll wait out for a pullback and then go short. That is how you should take a trade in the case of Nifty. Now, looking at the Nifty Pharma Index. So, Pharma Index, yesterday's price action was also not very decisive at the end of the day, because we did open on a positive note. However, by the end of the day, we were down from the opening level. So that indicated a negative price action yesterday itself. You can say that on account of the gap up, it was a positive close, but the price action from the highs suggested profit booking at higher levels. So yes, today the news is out. So now I think on the pharma index, the crucial support level is coming around 19,600. So I believe that there is a decent downside even from current levels in the case of Nifty Pharma.
Bear that in mind and trade accordingly. By the way, banking is the relative pocket of calm at this juncture. The Nifty Bank trading just about flat at this juncture and holding out. And I would hazard a guess to say HDFC Bank is perhaps one of the reasons why that is happening. Pull up HDFC Bank and see where it is, because after the quarterly update, it is one of the top gainers, if not the top gainer on the Nifty 50 at this juncture, holding on with gains of 1.5%. And you know what the weightage on the benchmark Nifty 50 is, and indeed on the Nifty Bank. We've got the first caller of the day. Dheeraj is calling us from Hyderabad. Dheeraj, thanks so much for holding the line. How can we help you today?
Yeah, my query is regarding Sona Comstar, Sona BMW.
Yes.
Yes, I bought it yesterday actually. I am holding 400 shares of Sona Comstar at 450 rupees a piece. So for the next 1.5 months or 2 months, should I hold this company or should I shift to any other auto auxiliary like Motherson or Sansera Engineering? And one more small query I have. Can I invest fresh money of rupees 5 lakhs like in the next week in frontline stocks like L&T and IT pack like HCL or any other pharma pack?
Okay.
Is my query.
You're looking to catch the bottom, is that right?
Yes.
You're looking
Absolutely.
to catch the bottom. Okay, so
For the next 1 year.
I'm glad that you asked that question for the next 1 year. Okay, I'm glad that you asked that question because I think a lot of people are going to be tempted by the kind of declines that you're seeing across the board. But the question's for you, Jatin, because it's a relatively shorter term question for Sona Comstar, or rather Sona BLW as it's called right now. Sona Comstar is a brand. What would you do with this? Because you've bought yesterday at 450, the stock is down 5% in trade today for a 1.5 month target. What are the levels that you'd watch for? And would you venture out? Would you be brave enough to venture out and deploy 5 lakhs of rupees next week in the markets, or would you hold your horses and wait for the dust to settle?
See, first of all, my advice here would be to take the loss and exit. And if he wants to continue to hold, then the next crucial support comes in at around 400. So if he wants to add in for a 1 to 2 month kind of a perspective, then 400 is a level around which we have the swing low that was touched around December 2023, around December. So that is the next crucial support level for Sona Comms. So as of now, my suggestion would be to exit at a loss at current market price. And if he has the risk appetite to hold, then 400 is the level around which he can wait out or consider to buy.
Okay.
No, and the second question was obviously on deploying of funds. What's your opinion?
See, as of now, I don't suggest to deploy funds because we need a positive close, a minimum thing that I would require technically to consider that the market has formed some or has found some support. So technically, I would wait for a daily positive close and then only start to look at stock specific ideas or even at an index level to start deploying my funds. So as of now, things are negative. So I will wait out for a couple of days and then take a call.
Okay, so that's the view with respect to Sona BLW, as well as what Jatin is saying is to wait and watch out for and see at least some positive momentum to get into these pharma and IT pack stocks. All right, our next query is from Manish Gandhi, who's writing in from Mumbai. He's holding 5,000 shares of Suzlon Energy at an average price of 30 rupees. So he's sitting on a profit of around 1.3 lakhs right now, and he wants a long-term view with regards to this stock. He wants to know whether to add, sell or hold. Samir, what's the view like on Suzlon Energy?
So, given the fact that he already has quite a decent lot and he's making good money, I'll say hold on, I wouldn't say add. However, if somebody doesn't have the stock, I would definitely recommend someone buying into it because we still believe the renewable energy space in India is good to grow. The company is trading at yes, a little expensive valuations, but the operating leverages that will pay through as the utilization goes up, we will see that the valuations are not as expensive. And then once that new capacity, which is already set up, starts ramping up further, you'll see that there's good upside and profit growth that will come through for Suzlon. So for your caller, I'll say hold on, don't add. I think there are other stocks you could have. You have a decent lot here. I mean, I don't know your portfolio, but you have a decent amount. For someone who doesn't have, please go ahead and you can buy the stock.
You can actually go ahead and buy. Interesting. Because I know for a fact, Samir, that you had said when it was 70 plus, if I'm not mistaken, that you were uncomfortable with the valuations at the time, or closer to 75, right? All right.
Correct.
Yeah. So, all right. So that's a view on Suzlon. We've got our next caller. Ganesh is calling us from Chennai. Hi, Ganesh. Good morning. And how can we help you today?
Hi. Good morning. I want to check the Kalyan Jewellers. Is it a time to enter? And I would like to hold it for a long term.
Okay.
And it fell down from 800 to 400 in last month. Now it is slowly, it's coming up actually. Since the gold price are increasing, my thing is whether this is the right time to invest in Kalyan and wait for a couple of years.
Okay. Have you considered any of the other jewelry companies, Ganesh? And I'm assuming...
No.
Yeah.
No, this is the first one.
Yeah, but I'm saying, have you looked at Titan, for example, or have you looked at some of the other companies?
Other companies are good, but this is a kind of price range is 400 around, you know.
Okay.
So others are a bit on the higher side. So I thought of invest in more shares here and then hold it for some time.
It's interesting you say that, Ganesh, because this is a common mistake that people make. By looking at the price, you are determining whether or not the stock is expensive, and that's not necessarily the right approach. Look up something to do with valuations, okay? And I'm going to ask Sameer to perhaps explain this to you. We could do a masterclass, and I guess we can talk about this the whole day. But Sameer, when we're talking about multiples, Kalyan, if I'm not mistaken, is still comparable to a Titan in terms of multiples, right? At the level that it is right now. Earlier, when it was much higher, as he's pointed out, it was actually costlier than Titan. So from that perspective, and given that gold prices are where they are, volumes are perhaps going to be a bit of a question mark for jewelry companies. Would you venture out and buy Kalyan or any other jewelry company for that matter?
Yes, so I would buy Kalyan first up to answer that question. And why? Yes, there's one thing you gotta look at the fact that Kalyan looks expensive when you look at trailing earnings, because they set up a lot of their stores, their franchisee stores in the last financial year, which are scaling up. Once the operating leverage of those come through, that is going to lead to a great jump in profitability. And you got to realize, when a company goes from 200 stores or 150 stores to 300 stores, that's a 100% increase. But that's not going to happen in the case of Titan, right? So when Titan trades at 90 times earnings and they scale up maybe 100 stores on their 600, 700 stores that they have, I mean, that growth is about 15 to 20%. So the operating leverage is not as strong. So yes, they look on historical basis, the valuations look comparable, but given the fact that Kalyan has fallen from where it has fallen, and given the expansion plans that they have, given the smaller base that they have, and given the growth opportunity from the unorganized to the organized sector that will continue to happen, we feel Kalyan will be one of the beneficiaries. We believe the jewelry industry in India has a huge opportunity to grow. We ourselves are invested in Titan and Kalyan Jewelers. Titan is more of a stable long-term. I mean, when you buy it at the historical prices, you don't think twice about whether you should sell it or not, because we know the growth is great. But Kalyan, given its correction, I would say yes, one can go out and buy. If you have a pick between the two, I would obviously pick Titan from the stability point of view. But if you want to have returns, Kalyan is also a good buy.
Okay, Ganesh, forgive me for adding a question of my own. And Sameer, this is an extremely interesting conversation from my perspective as well, because if I look at the trailing earnings, or I look at the trailing multiples, it's at what, 76 times or thereabouts, very close. What is the base case assumption for earnings growth that you are penciling in for Kalyan is the question that I have.
So for this current financial year, we have an EPS target of about 9 rupees on Kalyan. That would give me about 50 times. But given that the fact that the operating leverage that I talked about, let's talk about 100 stores barely making any margins, right? Because these are new stores, they need more customers to start coming in, the traction to pick up. Once the operating leverage of that starts coming through, we feel they could do closer to 12 to 13 rupees EPS maybe in the next financial year with these existing stores. We are not even considering the fact that more stores will be coming up. And if more stores do come up over a period of time and they go closer to about 14 and 15 rupee EPS, say, next year, I'm not saying it'll happen, I'm saying close to 13 would be fair, but if they project 1 year forward and you go to maybe 16 or 17, on 17 rupees earnings at 400 rupees, the stock is rather inexpensive when you look at what Titan is trading at, or what Senco was trading at, or what some of these other jewelry companies are trading at. And given the fact that this is a company that has taken all the necessary steps, they used to have assets like aeroplanes and helicopters on their balance sheet, which they've sold off. They used to have a lot of land bank, which they're slowly selling off and creating that as liquidity for the cash. They're working on a low-cost business model because they're working on FOCO, which is franchisee owned but company operated. So the investment is done by the franchisee. They give them X amount of return, and the balance profitability comes to Kalyan. So that, without expanding the capital base, the ROE is moving up. That is where we feel that even though on a trailing basis it looks expensive, if I take 13 rupees next year, it's about closer to, I would say, about 40 something, a little under 40, and if I take 16 or 17 in the year following, we are talking of maybe about 25, 26 times, which is not expensive.
2 years down the line, 25, 26 times.
Yeah. Yeah.
Okay. Okay. Interesting take on Kalyan Jewellers. All right. The next counter is that we're talking about is Zomato. Ajit from Hyderabad wants to know as to how the shares will perform in the next few months. He's holding 1,000 shares at 288 and he's bought this in Jan mid. So he's bought it at elevated levels because the stock has seen a significant amount of tanking since then. And he's sitting on a loss of 78,000 right now. Jatin, I'll come to you. Goldman Sachs had an interesting report otherwise today, which was based on the fundamentals, and it said that last time that Zomato had tanked was when the food delivery growth had gone stagnant, but the bounce back from that was very quick. And they're expecting the same thing to pan out as well for quick commerce. The quick commerce, once it becomes profitable, it will bounce back very quickly, and Zomato will have a large share in the entire pool. But what's your view with respect to where charts are concerned for Zomato?
Yeah, so the price action is not very encouraging. What we see on the daily charts is that the 40-day moving average is acting as a very strong resistance, and since December last year, when it rolled over below the 40-day average, it has not been able to surpass that since the last 4 to 5 months. So now, having said that, the price action of last 3 to 4 weeks is holding on to the level of around 199, 200 odd levels. But I feel that it's a matter of time. Zomato breaks down and goes towards 174, 179 odd levels, where we have the next crucial support. So the chart pattern is not very encouraging at this point of time. Our view on the stock is negative, and we should wait for levels of around 180, 175 to venture out and buy.
All right, so that's the view coming in on Zomato. Our next caller is calling in from Pune. Vikas, a very good morning to you. How can we help you? Hi Vikas, I can hear you. Go ahead with your query. Okay, I think we've lost him.
Yeah,
can you hear me, Vikas? Okay, we've lost him. But we have his query. He's holding 100 shares of IRCTC bought at 740 a piece, and he wishes to add 200 to 300 shares more. Samir, I'll come to you on this one. He's sitting on a loss of around 2,000 rupees right now. But do you think IRCTC is a good counter to invest in right now?
Yeah, so fundamentally, yes, I think it's interesting. It's come down a bit. And I'll tell you what, look, it's got a monopoly kind of business when it comes to ticketing. And that business, though they've captured already 85% of the market share for tickets sold in India, as the number of trains keep adding and as more ticketing, cancellations, all these things happen, IRCTC's revenue stream from that will see an uptick, but it will be a marginal uptick of maybe 5 to 7% annually. But they've gotten into this other business of tourism, right? They create these packages, travel packages, which they're selling on their portal. And that is beginning to see some traction. So if the traction in that continues to increase, what will happen is you'll see this is a very low cost kind of operating margin business like a travel agency, but the profitability that can come through that is quite high. Even in the food services, they've got all these tie-ups with various companies which are now slowly starting to scale up. And as the orders on these trains keep increasing, you'll see that part of the revenue stream also starting to increase. Of course, they are much smaller part of the revenue stream, but as they start growing in size, the ROEs will keep remaining healthy. Investments required are almost none in this company. Strong cash flows will keep happening. Dividend payouts will keep happening. We believe this is a good investment over a 3 to 5 year period. Stock is a little expensive on valuation. I'm not denying that fact. But we believe, given it is a kind of monopoly and kind of the reach that they have, they will be able to maintain these higher valuations over a longer period. And as the growth and profits increase, so will the stock price.
Okay, all right. So that's a comprehensive view on IRCTC. Gentlemen, do stay with us. We have to slip into a very quick break. Viewers, I know that we've been spending a lot of time on the markets, but it's that kind of a day. We'll take more of your questions on the other side, but we also have a conversation lined up to help you understand the implications for the pharma stocks that are taking a battering today. So do stay tuned.
Whenever a film sank in 2000s, it was always flop actor. मेरी तरफ नहीं देख रहे देखो तो सही. I compare an actor's career like the stock market. Sometimes your stocks are low, right? And when your stocks are low, no one's buying. Sometimes your movies do well and your stocks are on the rise and everyone's suddenly buying that stock.
What point do you think that the film career perhaps is not going the way that you thought?
Itch of wanting to be an entrepreneur started itching a little more and I wanted to scratch it.
One of the most important lessons is to know when to pivot.
The burn was far more than the earn. We were burning and I was watching my money just go out and like, oh my God, what's going on here?
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are
Welcome back. You're watching Ask Profit, and we're joined on this side of the break by Sneha Sheth, who's Senior Analyst at Angel One. She'll be helping you with your technical calls. And on this side of the break, the first question that we're taking is, in fact, on Adani Power. And we've got Koti Reddy who's writing in, who's asking about the outlook for the stock. He's bought at an average price of 562, which is not too far away from the current market price. He's got 6,000 shares and he's wondering what to do. Sneha, what's the outlook? Should he hold?
If you look at the chart structure for this counter, I believe it has made a strong base around 465, 460 zone. And from there, the index, this counter has been, showing some strength. In fact, last 2 sessions, we have seen addition of long position in the future segment. So I believe there are chances that we can see an up move beyond the buying rate of the clients. So I would suggest keep holding it, keep a strict stop loss around 510 for now. And the first target would be at least towards 570, and then the possibility is that the counter can head towards 600 plus levels even.
Okay, so that's the view with regards to Adani Power. Our next caller, and standard disclaimer, Adani Power is also a part of the Adani group of companies, and NDTV is also a part of the Adani group of companies. Moving on to our next caller, Rajan is calling in from Mumbai. Rajan, a very good morning to you. How can we help you?
Good morning, madam. Really very glad to talk to you again. And your program is reached to such a popularity that even on WhatsApp also I don't get my chance. So luckily I get to speak to you.
Yeah, thank you so much. It made our day.
Yeah, my query is on Pfizer. I have 10 shares of Pfizer at an average price of 4,900 purchased in March 2024.
Okay.
Somehow under this tariff trauma and tariff climate, I am undecided whether I am a long-term investor, but right. Somehow I feel that we should switch on to a good script like ITC, hotels or Sagility.
Okay.
I like Samir sir's reply because he gives very sharp and to the mark and which touches my heart. So I would like him to please answer my query.
I agree to that, Rajan. That Sameer's answers are always very to the point and very detailed. Sameer, he's given you a compliment and he wants to have a view on Pfizer, as well as he wants to know whether he should shift to something like ITC Hotels or Sagility India.
Okay, so first of all, on Pfizer, we don't have active coverage, but what I can tell you is they will not be as affected negatively on the Trump tariffs on pharma in any which way because they are predominantly for the India operations, right? So they don't do too much of the exports to the US market, so they don't get affected. Obviously, the Indian market is still a growing market, but like I said, I haven't studied the company, so I don't want to say more than that on it. Coming to ITC hotels, yes, we think that's a great buying opportunity. And one of the reasons we say that is they are also growing the book quite handsomely. I mean, in the sense that properties are going to keep increasing. It's a newly formed company. The actual company's financials are not totally available. And once people start seeing that coming through, I think there's a discount that it is trading to Indian hotels. Now, the discount obviously sustains to Indian hotels for the reason that Indian hotels has a brand name which is very strong and they are also growing. But we believe the gap is quite large. So either Indian hotels needs to correct down a little bit or ITC hotels needs to move up. And we think the second is more probable that ITC hotels will probably get valued better. Plus the growth opportunity, like we said, for India tourism is still very strong. Their portfolio of properties is great. They're signing up more every day, which will allow them to also grow their top line and profits. Through the what do you call it, low cost investment model, which is the management contracts. So we think ITC hotels is a good investment. Sagility, unfortunately, is a new listing. The stock has run up a lot, and I don't have a view on that, so I don't want to comment again.
Rajan, I'm told that you held the phone for half an hour, and I really, really appreciate that you've given us that time. And really, thank you. No, thank you so much, and we really appreciate the time that you're spending with us. The next question is from Niva, writing in from Chennai, and Zydus Life Sciences is the name of the counter. Can she add more at this juncture, and what is the target for a period of a year? Sneha, on the charts, what's the view? She's bought at levels of 902.
If you look at the chart structure, we have seen last two sessions, we have seen decent selling pressure coming in. Looking at the overall chart structure, wherein we have seen decent consolidation and which has been, at the higher levels, certainly we are seeing some fresh selling coming in, which is not a very healthy sign for now. I believe there is a support around 830, 835 zone. And if someone is holding, keep a stop around those levels. In case it corrects below that, exit it. That would be a better strategy for now, but don't keep holding for long. Keep a strict stop loss around 830 and hold it for now. In case of any bounce back, I believe it is very important, at least it manages to surpass today's high, that is around 905, or it manages to close at least above whatever losses we have seen. If it in the later half, if we see some recovery from the lower levels, that would be a very interesting thing. And certainly if it closes above 500 and 905, 910, that would be very interesting. And for an overall chart structure to improve, I think 1000 is the level one should be watching if someone is stuck in this counter. Any move above 1000 would be very interesting for this counter, which can, bring some momentum coming in back in the counter, which we have not seen in last couple of months now. So 1000 is the level to watch. On the lower side, keep a stop around 830 for now and keep holding it.
Okay. All right. Madhu is calling us from Hyderabad next, and the question is on Tata Elxsi, I believe. Madhu, good morning, and how can we help you today?
Thank you. I bought this share in 2021 at around, the price was around 2,890 rupees, around 4 shares. So now there is a, after the monthly support has been broken. So I just want to know whether should I hold it or sell it off.
Okay, so you've been looking at the charts, and so, but I'm just curious, you've been holding for so long, I'm guessing you bought based on the fundamentals, but you're also looking at the technical charts. Do you need to sell at this juncture?
I'm sorry?
Do you need to sell? Do you need the money, or are you willing to hold for the long term?
No, I can hold it, no problem. But I just want to know because the monthly support was around 5,500 or something like that. The monthly chart now looks weaker to me. So I just want an expert opinion on this.
Okay, got it. All right. So, Sneha, I'll come back to you on the charts then, because she's looking at the charts very closely. What do the longer term charts suggest for Tata Elxsi?
If we look at the monthly chart structure, I believe this counter is hovering around the 89 EMA. which is placed around 4,800 zone. So at this point in time, 4,800 followed by 4,400. These are the major support zone. Because if you see the monthly chart, there is 61.8% retracement level coming around 4,400. So this zone is very important. If it manages to sustain above this, I think someone who's holding a long can continue to hold it for a medium to short long term perspective. So 4,400 is the main important support zone. Around 4,400, 4,600, that is the support zone. In case of any move, looking at the chart structure, there are chances that it can correct further. But yes, in case of any pullback move, at least towards 5,500, 600 zone, that would be very interesting for this counter. And then only we may see some, buying interest coming in. Otherwise, there are chances it can be choppy and it can be trading in a range where it can head towards the support zones.
All right, so that's the view for Tata Elxsi with respect to charts. Sneha, I'll stick with you for the next question as well. Neha from Bengaluru is holding Manappuram Finance and she wants to know the target for the next 3 months. She's sitting on a profit of 20% is what she's saying right now. What are the charts indicating? Should she book profits right now or should she wait for a further upside?
So yeah, after a very strong move, which we have seen on March 21st, the counter has been consolidating. But overall, after such a strong one-day move, the consolidation is very much likely. I think if someone is holding a long position, they can continue to hold, keeping a stop around 220, 222. That is the support zone for now. And there are chances that counter can head again towards 240 to 45 zone. So, and beyond that is also possible looking at the overall chart structure and the volumes. So I would suggest keep a strict stop loss around 224 for now and keep holding it for the target of 250 would be the first level. And there are chances that it can head towards 265 to 70 zone even.
Okay, so that's the view with regards to Manappuram Finance. Our next caller, Mahadev, is calling in from Bengaluru. A very good morning to you, Mahadev. How can we help you?
I have Tata Steel. I have the SpiceJet, madam.
Okay.
1700. I bought at 44 rupees.
Okay.
Should I hold or sell out, ma'am? Please tell me.
Okay, and you want to hold this from a longer term perspective, right?
Only.
Okay. Samir, I'll come to you. He wants a view on SpiceJet. And, I'll club this with Interglobe as well. The stock is doing well in trade today. And this is because crude oil prices have gone down. What's your view with regards to both of these airlines and which one would you pick?
So if you have to pick, obviously you pick Indigo because of the fact that they are profitable and, the market leader, the kind of number of planes that they'll be adding in the current financial year will probably be equal to what SpiceJet will have, I think, at the end of next year. That's the kind of scale that Indigo has built. So if I had to pick, I would pick that. But since the question was related to SpiceJet, what I can tell you is that, look, the pain point for SpiceJet for the time being is over. In the sense that they've raised the capital, they've taken the money that they needed for their expansions. They will be adding more planes continuously, which will allow them to have more routes, and more routes means more operating leverage. So we believe that SpiceJet, since you bought it and holding it, could move up to a probable price of 60 in a 1 year kind of view. And if you have maybe a 2 year kind of view, it would probably be closer to 75 because it is a turnaround story. But you got to realize when it comes to turnaround, you got to be able to get your act right. Of course, he's proved it in the past. When Ajay Singh has proved it in the past that he can do it. So we think he should be able to pull it off. So maybe if you have a 2 year view, you could probably get 75, 80, which is good returns. But if you are a long term and want to hold on to any aviation stock, I think Indigo is the way to go given the fact that the leader. But in a nutshell, I'm not a fan of aviation. I believe aviation is a place to lose money. It's known as the industry that turns billionaires to millionaires. But yes, at this point of time, SpiceJet has a turnaround and you can make a 2 year kind of view and make some money off it.
Turns billionaires into millionaires, barons into fugitives. There are several things that have happened in the aviation space. The future prospects of Bank of Maharashtra being sought by Karan this morning, and since it's a 1 year question that is being asked. The stock is currently under a little bit of pressure, 2% lower at 47 or thereabouts. Sneha, on the charts, would you venture out and buy Bank of Maharashtra right now?
For now, I would avoid. If you look at the chart structure, this counter has been under pressure, although it is consolidating, wherein on the higher side, I believe 50 is a resistance zone and the support is placed around 42, 43 zone. Unless and until we don't see a strong up move above 50, 52, I would avoid for now. And so from those levels, we would review the counter, because there are chances that the consolidation may continue for at least for 2-3 couple of weeks more from here on.
All right, so consolidation might continue for Bank of Maharashtra. Anit is calling us from Mumbai. Hi, good morning. How can we help you today?
Yeah, hi, good morning.
Yes. Please go.
Actually, I've bought 3,000 shares of Equinox at 142.
Okay.
So I'd like a long-term view on the share, please.
Okay. Can you help me with when you bought this and what the thesis was? What was your thinking?
So actually, the initial buy was at the rate of around 67. And then I booked my profits and again re-entered at 142.
Okay. All right.
And I've been holding it for the past 2 years now.
Okay. And as a play on the real estate space, correct?
Yes, please.
Got it. All right. So, Samir, what's the view specifically on Equinox? Of course, some people might not know this was formerly known as Indiabulls Real Estate. And so, therefore, you would essentially be giving a view on the Mumbai real estate space as well. What's your opinion?
So Equinox has actually again gone through a lot of the difficult period, right? Indiabulls, had its problems with the real estate arm, which then they eventually sold out. Now Equinox, which has been taken over, which will be merged soon into the Prestige Estate, and I forget the name of the company. They'll be merging into the arm of the property management company of Prestige Estate. So once the Embassy is the name. So once they merge into that, then you will get an entire total play of the real estate basket of property management plus development. Now Equinox in particular has a land parcel which they will be developing in Worli. So the 5th tower of the Indiabulls Blue is soon going to be launched. Once that gets launched, what you will see is the revenue traction going up because the pre-sales of that will happen. Unfortunately, Equinox also has a lot of other land bank, but at the moment, nothing major has been announced. So probably a sideways movement, but once it merges with Embassy, and then you get the entire total of Embassy Group plus the Indiabulls Group working together, I think there is upside. So I would say hold on to it. Probably can move back higher, closer to your buy levels in the next 6 months, and you can probably make money over maybe a 2-year period.
Okay, so hold is the view with regards to where Equinox is concerned. Our next caller is calling in from Bengaluru. Anant, a very good morning to you. How can we help you?
Good morning, Mahima. I was holding Signity Technologies 40 shares.
Okay.
At the rate 17.15.
Okay.
The results were good. However, after this, they announced the share merger with Coforge. It is, it's a free fall.
Right.
I was, worried. What I can do now? Should I average, or should I not average, or should I book the loss?
Okay. Okay, got your query, Anand. I'll take this up with Sneha. Sneha, what are the charts indicating for something like a Signity Tech, and what should Anand do?
Here, if you look at the chart structure, the correction is quite high. Overall, the counter has corrected nearly 14 to 15% this week itself, and it is trading around the support zone. But it has, certainly the chances of counter reaching the support is quite high on the weekly chart structure, even because if you see, there is a support around 1240, 1235 zone, which I think it is very much likely that it can correct further, looking at the volumes in last 2 sessions especially. So I think someone who's holding better exit it, because the chances of correction is quite high. If it corrects below say 1230, 1235, there are chances this counter head towards 1,000, 1,100, 1,050. That is the zone which is possible. So for now, I would suggest exit this counter for now.
Okay. A quick view on SJVN is being sought. Govind is asking, he's bought at levels of 160 and he's seen significant erosion in capital. Relatively quick answer. If you have a view, Samir, what's the view here?
So I think given the fact that he's bought it so high, it's going to be difficult for him to recoup his capital. We have a positive view on SJVN over a 3-year view, a 3-year target price. So we feel it could go up to 130, 140. But given he's bought at 160 for him, it's going to take a while to make some money. I would think if it goes lower, maybe average or take a loss and find something that you can recover your money, because it's not going to be a fast mover if you're expecting that.
All right, just going to check, Sneha, if you have let me slow down a little bit. Sneha, I'm going to check if you have a view on ChemFab Alkali. And this is a stock that is 1,000 crore market capitalization company. And Shankar wants to know about this. He's called us. Do you have a view?
I actually don't track this.
Okay, unfortunately, Shankar, it's unlikely that we're going to be able to take this. So I'm going to take another question from WhatsApp because of the paucity of time. And this question is on metal counters and specifically on Vedanta. Would you buy at the current market price? The question, if you have a view. Samir, on metals, Dinesh wants to know.
So, we are entering a period where if we see a global slowdown happening because of these tariff barriers and things like that, commodity stocks can face a bit of heat because commodity prices can come down when we have a slowdown, and especially a slowdown in consumption. And then it'll take a while for the commodity cycle to turn. Now, Vedanta per se as a group, I'm never always in favor of, for the simple reason that the corporate governance has always been questionable. So if you want to play the metal space, I think better opportunities to play it or better ways to play it. One is Hindalco for the aluminium and copper side. And if you want to play on the steel side, you could probably play a Tata Steel or a JSW Steel, better managements. Tata Steel fully vertically integrated, and if there is an upside in metal prices, steel prices, and the slowdown doesn't happen, Tata Steel will be the biggest beneficiary because he gets the iron ore from the mine to selling the final product entirely. So any upside in the prices is positive for them, but JSW has a slight benefit that if the prices go down, so do the raw material prices, so they don't get hit as badly on the downside. Operating leverage is not as negative on the downside. So that would be the better way to play it. I would avoid a Vedanta if possible, given they have the demerger happening, they have the oil little split up, they have all of these other things, and of course the parent has its own debt and its own legacy problems.
Okay, Samir and Sneha, thanks so much for joining us today. We are ending this program a little early, or this, at least the Ask Profit part of this, because we want to talk about pharmaceuticals. Thanks so much for joining in and for answering all the questions you did. Vishal Manchanda, Senior Vice President, Institutional Research at Systematics Shares and Stocks, is joining us on the phone line. Vishal, thanks so much for joining in. I'm sure that you've got a lot to think about today, and we spoke just yesterday. And pharmaceuticals was an exception in the list that we were discussing yesterday, but things have changed quite dramatically. The index as a whole down about 4% or so. What do you make of the latest development?
Yeah, so I think there have been comments that we'll see the pharma sector coming under tariffs very soon. So basically that review should not take long, and we'll have tariffs on the sector and probably at levels not seen before. So that's the comments. Those are the comments that we are hearing on the sector. But I think I'll kind of reiterate my view on this. So I think even if tariffs are imposed on the sector, they will be inflationary. And so I would divide this space, pharma space, into three categories. One is the commodity generics, wherein I think tariffs will be passed to the consumer because there is no space for Indian companies to absorb. Neither is there are capacities in the US to replace the Indian demand that's coming, Indian supplies that is coming. So broadly, that's where I am on the commodity generics. Then there is a second part to the business, which is high value generics, like those of drugs like Revlimid and others. So I think on those we might see some impact, but the dependence is not very large as of now. So I don't think that will create, that is something we need to worry about in terms of the numbers that can basically dent. It will not dent the numbers basically too much. And the third is the NCE portfolio. I think the only company there is Sun Pharma, which I think even there the impact should not be more than 1 to 2% of their overall net profits.
Okay,
so broadly, I'm not worried about this.
You're not worried. So therefore, the kind of drawdowns that we're seeing right now are overdone in your opinion. And in this scenario, considering that you're not too worried, what would you be looking at and saying this looks very attractive right now?
So I think I was the prices, some of the prices in the large cap spaces, I was I think they were on an elevated level. Now probably they are at a more comfortable level to look at these stocks.
Can you name a few stocks that you were looking at specifically, Vishal?
So I think among the names, I prefer Sun Pharma and Cipla. So those are the names I would recommend investors to look at.
Okay. When it comes to CDMO companies though, considering the valuation picture and considering what you told us about the three segments that you're looking at and the implications of potential tariffs and considering valuations, what would be your opinion? Would you still be bullish?
Yes, so I'll remain positive on the sector because of the strong fundamentals in terms of the large US FDA approved infrastructure we have to cater to the global markets. Then the capabilities around pharmaceuticals, and we are also kind of slowly getting into NCEs. So fundamentally, we are poised well. There might be some temporary disruptions in account of the tariffs because of the transition. That's the only thing we need to be prepared for, the transition of tariffs coming in. So that's where there will be some disruption, but I think post that things should be smooth.
Sir, considering a temporary disruption as well, do you think then for a shorter term perspective, domestic players will be a better bet right now? That is one part of my question. And secondly, then would you also kind of diversify into hospitals and diagnostics, if not these pharma CDMO companies?
I think these are safe havens. The valuations pretty much account for these being safe havens. But I think if you want to kind of get that alpha, probably we'll need to figure out something from these names which have corrected.
Is there a potential, Vishal, in your opinion, of carve-outs within this space? I know you broke it up into three buckets, but possibility of a CDMO and biosimilar being exempted from the tariff list?
Unlikely. I don't think so at least for biosimilars, I think that's a category where probably US would have capacities and a lot of capacities to take care of their demand. So probably that's a sector I would be worried about rather than be positive about.
Understood. Thanks so much for joining us this morning and for your insight. Absolutely vital having you this morning. Thanks so much.
Thank you. Thank you.
All right, that brings us, and hopefully that has given you some perspective on how to treat your investments as well. Of course, we'll be talking about this in a lot more detail over the course of the day, and we'll keep you posted on any developments that we hear from the United States and specifically from the office of President Trump. That's all we have for you on this edition of Ask Profit. It's been a pleasure bringing it to you. Happy Friday for what it's worth. Do stay tuned. This is NDTV Profit.
Whenever a film sank, in 2000s, it was always flop actor. मेरी तरफ नहीं देख रहा देखो तो सही. I compare an actor's career like the stock market. Sometimes your stocks are low, right? And when your stocks are low, no one's buying. Sometimes your movies do well and your stocks are on the rise and everyone's suddenly buying that stock.
What point do you think that the film career perhaps is not going the way that you thought?
Itch of wanting to be an entrepreneur started itching a little more and I wanted to scratch it.
One of the most important lessons is to know when to pivot.
The burn was far more than the earn. We were burning and I was watching my money just go out and like, oh my God, what's going on here?